On Friday, gold crashed to $4,350, its lowest level of 2026. This morning, gold opened at $4,559. That is a $209 recovery in a single weekend. If you panic sold on Friday, you just locked in a loss on what became a 2-day buying opportunity. What changed over the weekend? And more importantly, is this recovery real or just a dead cat bounce before another leg down? The answer determines everything you do with your money this week. Welcome to Financial News Daily. Welcome to Financial News Daily, your trusted source for global financial updates. Today is Monday, June 8th, 2026. 3 things drive today's episode. 1. What caused gold's $209 weekend reversal? 2. The full Monday market open scorecard. 3. The one event Wednesday that decides if this recovery holds or collapses completely. Let's move. Here is exactly what happened between Friday close and Monday open. Saturday morning, Trump posted that Washington and Iran had largely negotiated a memorandum of understanding on a peace deal that would reopen the Strait of Hormuz. Markets read this as positive. Oil eased, dollar weakened. But, and this is critical, Trump also warned he was in no hurry to finalize the deal. Sunday, Iranian Foreign Minister Arakchi contradicted Trump directly. There has been no meaningful progress. Iran-backed Hezbollah rejected the U.S.-mediated ceasefire proposal between Israel and Lebanon. So the situation entering Monday is, Trump says deal is close. Iran says nothing has changed. Hezbollah has rejected any ceasefire. Both statements cannot be true. Yet markets, starved for any positive signal, chose to believe Trump's version. The result: gold opened Monday up 1.1% to $4,559 per ounce. U.S. gold futures gained 0.8% to $4,559.80. As analyst Jim Wyckoff of American Gold Exchange explained, there is just some bargain hunting coming in and positioning ahead of the U.S. inflation data this week. Translation: this is not a fundamental shift. This is short-term positioning before Wednesday's CPI. The pivot point Light Finance told us to watch this morning, $4,352. Gold opened well above that level. Bulls are defending, for now.
Every major asset at Monday's open. Gold. Friday close, $4,350. Monday open, $4,559. Up $209, plus 4.8%. Light Finance forecast Monday's range at $4,376 to $4,509. Gold opened above that range, stronger than expected. 2 levels to watch today. Support, $4,352, already above it, bullish. Resistance, 4493 to 4540, the ceiling. Close above 4540 today, recovery has legs. Rejected at 4540, Friday lows could return. Oil. Iran deal optimism eased prices at open. Brent pulling back from last week's 3.9% weekly gain. Range, $88 to $92. S&P 500. Cautious recovery attempt after Friday's sell-off. AI stocks stabilizing. Watch direction in first 30 minutes. Dollar. Weakened on Iran optimism. Weaker dollar equals direct support for gold. This is the key relationship this week. Monday verdict. Gold leads, oil easing, dollar weak, stocks cautious. Constructive setup, but nothing confirmed until Wednesday CPI week. Every major asset at Monday's open. Gold. Friday close, $4,350. Monday open, $4,559. Up $209, plus 4.8%. Light Finance forecast Monday's range at $4,376 to $4,509. Gold opened above that range, stronger than expected. 2 levels to watch today. Support, $4,352, already above it, bullish. Resistance, $4,493 to $4,540, the ceiling. Close above $4,540 today, recovery has legs. Rejected at $4,540, Friday lows could return. Oil, Iran deal optimism eased prices at open. Brent pulling back from last week's 3.9% weekly gain. Range, $88 to $92. S&P 500, cautious recovery attempt after Friday's sell-off. AI stocks stabilizing. Watch direction in first 30 minutes. Dollar, weakened on Iran optimism. Weaker dollar equals direct support for gold. This is the key relationship this week. Monday verdict, gold leads, oil easing, dollar weak, stocks cautious, constructive setup, but nothing confirmed until Wednesday CPI.
The most important dynamic this week, in 60 seconds. Trump Saturday. We have largely negotiated an MOU. The strait could reopen. Iran Foreign Minister Sunday. No meaningful progress. Hezbollah Sunday. We reject the ceasefire proposal. Both sides cannot be right. If Trump is right, oil drops to $80. Inflation falls. Fed rate hike probability drops. Gold loses $300 to $500 war premium. Gold falls back toward $4,200. If Iran is right, war continues. Oil stays above $90. Inflation stays above 3.5%. Gold's war premium holds. Safe haven demand continues. Markets are currently pricing 50-50 on each outcome. That split is exactly why gold is swinging $200 in a single weekend. The moment this contradiction resolves, in either direction, expect the biggest single-day gold move since January. Watch every Iran headline with the same intensity you give Wednesday CPI. They are equally important.
Here is your complete calendar for the most important week in June. Today, Monday, June 8th. Gold pivot point, $4,352. Already above it at open, bullish sign. Resistance ceiling, $4,493 to $4,540. Watch where gold closes today. The close matters more than the open. Tuesday, June 9th. Multiple Fed officials speak. Any hint of rate hike timing moves gold immediately. Watch for statements from Governor Waller and President Williams. Wednesday, June 10th. The big one. US CPI for May, 7:30 a.m. Eastern. 3 scenarios. You know them. Above 3.8%, gold drops to $4,186. Between 3.4 and 3.8, holds 4,300 to 4,500. Below 3.4%, gold snaps to 4,600 plus. Thursday, June 11th. US PPI data, producer price inflation, confirms or contradicts CPI signal. Friday, June 12th. University of Michigan consumer sentiment and inflation expectations. If consumers expect higher inflation, that is the most stubborn inflation signal of all. June 16th to 17th, FOMC meeting. Fed Chair Warsh's first major decision. Rate hike? Hold? Any hint of cuts? This meeting could be the most consequential Fed event of the entire year. The week ahead is not 1 week. It is 5 consecutive market-moving events back to back to back. Position for volatility, not for a specific direction.
Let me be direct. Monday's $209 gold bounce is encouraging for gold holders, but it is not a signal to chase. Here is the framework for this week. If you hold gold, do not sell into Monday's bounce. Let Wednesday's CPI confirm direction. If CPI is benign, hold or add. If CPI is hot, reassess at $4,200. If you want to buy gold, do not chase Monday's gap higher. Wait for Wednesday's CPI reaction. A hot CPI dip back to $4,200 to $4,300 is a better entry than chasing $4,559 today. A
A cool CPI above 4,600 confirms the recovery is real. If you hold stocks, defense and energy remain the most insulated from this week's data. Consumer discretionary and high-growth tech remain most vulnerable to a hot CPI. If you hold cash, this is your best week of the month to deploy it, if CPI cooperates. Keep it ready until Wednesday, then act on the data. The investors who thrive this week are not the ones who guess correctly. They are the ones who wait for data, then act with conviction. Conviction without data is gambling. Conviction with data is investing.